You talked about pinning some hopes in China. What kind of recovery are you seeing?
Yeah, good afternoon. Thanks for having me. Look, the recovery in China, in June in particular, and we've seen it over April, May and June, when we use depletions as our measure, which is our, great measure of consumer demand in that market, has increased steadily over that 12-week period since opening up, if you like, of some of the cities and markets in China. And June saw that increase to a 40% depletions growth year on year versus the same time last year, clearly, for across our portfolio and across all of our channels. So that was a great sign after having April and May of sort of circa plus 1% that, the business and consumption and demand in the China market for our brands has continued to recover really strongly.
You have the pandemic. You also have worsening relations between China and Australia. Is that impacting the wine industry in any way? The tensions between China and Australia?
Clearly, we keep a very close watch on and a close eye on not only the media, but through our relationships we have in different government agencies across both China and in Australia as well. And to this point, we haven't seen any impact on either our business or the wine industry in terms of any form of problems with either our customers or our own business. So from our point of view, we're continuing to invest in China, build our presence in China. We want to become more of the fabric of China, as we grow our business and build the wine category. So we feel like our investment in our team and our brands will continue. And our consumers and the consumers in China continue to demand our wines and also numerous other wines. So it's a great category. Clearly, it's a worry as you read the press, but for us at this point in time, we'll react to facts and we'll react to when we see things happening in the market. So pleasingly at this stage, the answer is there's been no impact.
Tim, the company has talked about possible asset sales. Give us an update on possibly spinning off Penfolds. Where are you on that?
Yeah, the Penfolds, what we announced in April was we're undertaking a piece of work which I call the separate focus strategy, which allows us to really do the deep dive and deconstruct and reconstruct our business with a view of if we had a Penfolds business and a remaining Treasury Wine Estates portfolio business, how could we best grow those two portfolios? Because they do have unique characteristics, particularly from a consumer point of view and from a growth opportunity perspective. So as we've done that work, a number of alternatives we're evaluating and we continue to evaluate, one being a potential demerger of that business, the other being a divisionalisation approach, and there's a few other iterations in between those that we continue to do the work on. And clearly, as we go through this pandemic period and we recover and the business starts to recover as our markets recover, that is a priority focus for us at the moment. So, we're not rushing to make that decision, but I guess it's underpinned by a desire for us just to make sure we've got the construct of our business and the operating model in its most effective manner to help grow all of our portfolios into the future. That's the premise behind
it. Tim, it's Rish. I think you're going to be dramatically shrinking the size of your US business. I think you're going to be cutting it by about a half. Is that essentially a prelude to get out altogether and have more divestments there?
Yeah, so the first point is correct. That's the ambition I've got for our US business. I'll start with, we will not look to exit the US business. The US business for us, it's the biggest wine market in the world from a consumption point of view. It's a premium wine market. Luxury brands particularly do well in that market. So it actually plays to what around the globe, our strengths are as a business as Treasury Wine Estates. So if you marry up consumer demand with our strengths and what we believe we're great at, then we need to be in the US market, and I certainly plan for us to be in the US market. What we've talked about in terms of the divestment and the reshaping of the US business is ensuring that we have a focused portfolio of more premium brands at higher price points that give us the margin structure and, again, play to our strengths. The divestment strategy or the exit strategy of some of these that we're talking about at the moment is more around the lower price point wines, what we call commercial wine or below $10 type price point brands, where if we can divest those quickly, we will at the right price with a value that our shareholders and ourselves internally, we'll see as the right decision. or we'll shrink those over time, because a growth engine of a US business around a tighter premium portfolio is certainly what I believe that the path forward is for our business.
Tim, of course, COVID-19 you've alluded to already, but how has it changed consumer behaviour? What are you seeing?
Yeah, consumer behaviour, in a lot of ways, it's escalated trends that we're already beginning to see in the marketplace. It's just happened a lot quicker. A couple of those are around the shoppers buying more through e-commerce channels or direct-to-consumer channels. That was already happening and growing year on year, but it certainly escalated very, very quickly. So for us, our digital communication through those channels, how do we engage with consumers through those channels, has been a really big change for us, particularly around luxury brands. There's an assumption that direct-to-consumer or e-commerce is lower-priced wines. It's not true. There's certainly a lot of opportunity and a lot of growth happening at the premium price point. The other one, which is probably unique more to the COVID-19 pandemic period, is around home consumption. Clearly, people are spending a lot more time at home with family and with friends in some markets, and also with just family in other markets. And wine consumption continues to be strong, and again at those premium price points. So how we give our consumers that home experience with food, it's a different environment for them. That's the challenge for us from a connection with those consumers. But we certainly see that being two shifts or two trends that will continue to stick for a fair period of time, and we're pivoting the way we're engaging with the consumers through that period.
And also, ultimately, we're talking about COVID-19 with lockdowns, and you're in Melbourne, a lockdown there. With these various lockdowns, how has it affected your production and how has it affected your supply chains? What have you had to do to really keep things going?
Yeah, we've been very, very fortunate on the fact that we have been deemed an essential service through this period of time from an industry perspective as a wine industry, and that's helped us no end. Through the vintage period, for example, here in Australia, we had an uninterrupted vintage in terms of we got all vintage done. So we managed to bring all the grapes in, make all the wine that we were hoping to make through that vintage period. Yes, you had strict protocols, strict hygiene requirements and all the rest of it, so it was not as efficient as it would historically have been, but it hasn't interrupted our supply chain. Our delivery networks still all operate based on the lockdowns because of our status as an essential service. So we're very pleased that that's the case, clearly, but broadly our operations haven't been impacted, which is fantastic.
What's it been like for the labour force? I mean, are there a lack of workers to perhaps pick your grapes because you don't have the backpackers in? And also, there's been a lot of pressure from the unions for perhaps, the locals to take up the jobs.
Yeah, I guess in our situation, we don't tend to tap into that workforce as part of our vintage crews. So, from our business perspective, we sort of move our own employees through the vintage. Yes, we have some casual workforce that comes in, but generally in our growing regions, particularly in Australia and New Zealand, which we've just gone through, it's the same workforce that come back year on year, and they're not necessarily travellers. They're actually people that are residents here. So we didn't have the labour shortage, if you like, that some industries have had.
Tim, final question from me here. I'm just going to dial back to where we started, and that's China. What's the demographic looking like at the moment? How's that all holding up? What type of price points are you selling most wine at in the country? And are you selling it right across there in the major cities? And which ones, if you can identify them?
Yeah, so the price point, our portfolio plays to more the premium price points, in China. Majority of our sales is sort of circa the, 150 RMB and above. We have a large brand, Rawson's Retreat, which is below that, which certainly meets a consumer need at that price point. But broadly, it's in the more premium price points. Consumers, and we're engaging more and more new consumers in the category and with our brands, and younger consumers, which is fantastic. We've also seen some shift in terms of the at-home consumption in China, which we hadn't seen before as well, particularly in those younger consumers. So we're really focusing our marketing efforts on engaging with those. And as we all know, I think through the digital means, digital mechanisms is very, very strong with that demographic in particular. So very broad in terms of the growth we're seeing across the consumers. And the traditional celebrations and the like, we still see now coming back. However, some of those new consumption occasions through e-commerce and through younger consumers is a wonderful opportunity as we introduce a lot more people in China to the wine category and to our brands.